If you watch stocks like NVIDIA explode in 2024, you might be kicking yourself, thinking you completely missed the boat on that kind of life-changing growth. But what if I told you that was just the warm-up? The truth is, 2025 is setting up a new and in many ways more interesting opportunity for explosive returns. But you're not going to find it everywhere. It's going to be concentrated in a handful of very specific companies. The market is at a tipping point. The first AI wave has already made its splash, but the second, much bigger wave, the one where every industry adopts it, is just starting. This is where real, long-term growth stories are made. We've spent countless hours sifting through the data, analyzing trends and stress-testing financial models to find the companies that aren't just riding the hype, but are fundamentally built for a massive run-up. We've landed on 5 stocks, mostly in tech, that are signaling they could double your money by this time next year. So if you're looking for the breakout stars of 2025, you're in the right place. The first one is a name you definitely know, but its next chapter could be its most profitable one yet. Before we get into it, a quick but important heads up. I'm not a financial advisor, and this is purely for informational and entertainment purposes. All investing has risks, so please do your own research and talk to a professional before making any decisions. All right, let's get into the first stock that could seriously juice your portfolio. And hey, right at the top, if you get any value out of this, do me a huge favor and hit that subscribe button. We put out deep dive research like this all the time, and by subscribing, you won't miss our next big idea. Kicking things off is the undisputed heavyweight champion of the AI revolution, NVIDIA. Now, I know exactly what you're thinking. NVIDIA? Really? Hasn't that ship already sailed? And look, you're smart to be cautious. After the mind-bending gains it's already posted, it's easy to think the best days are over. But that's a surface-level take that misses the much bigger story playing out for 2025. First, let's quickly recap what NVIDIA does, because it's the key to this whole thing. NVIDIA makes the graphics processing units, or GPUs, which are the absolute bedrock of artificial intelligence. Think of them as the engine for the entire AI economy. From the giant data centers run by Microsoft and Amazon to the software on your phone, NVIDIA's hardware makes it all run. They don't just lead this market, they have a near-total grip on high-end AI chips, a position they've built over decades of relentless work. So why could it double from here? The thesis for NVIDIA doubling in 2025 comes down to 3 key factors. First, the switch from their H100 chips to the next-generation Blackwell platform. This isn't just a minor upgrade. It's a quantum leap in power that will trigger a massive new spending spree from their biggest clients. Companies in the AI arms race simply can't afford to be left behind, which means upgrading to the latest and greatest. We're talking about a demand pipeline that's already locked in for 2025 and beyond. Their data center revenue has been astronomical, surging impressively in recent quarters, and that's before Blackwell is even fully rolled out. Second, AI is expanding beyond the cloud. So far, the big money has been in data centers. But the next frontier is AI at the edge. Think AI built directly into PCs, cars, robots, and business software. NVIDIA is attacking these markets hard. Their AI PC chips are about to create a brand new computer category, and their drive platform is becoming the go-to brain for self-driving cars. This blows their potential market wide open, from hundreds of billions to potentially trillions of dollars over the next decade. Third, the valuation. Yes, it's high, but you have to look at it in the context of its insane growth. Analysts are forecasting unbelievable revenue growth to continue. Some projections put their 2026 revenue at an eye-watering $170 billion, a 30% jump from the staggering $130.5 billion they hit in fiscal 2025. The consensus on Wall Street is still a strong buy, with some price targets hitting $250, which suggests major upside even from here. Now for the risks, because nothing is a sure thing. The main risk for NVIDIA is that high valuation. A stock priced for perfection is vulnerable to any hiccup, whether it's a competitor making a surprise breakthrough or geopolitical tensions messing with its supply chain in China. Plus, its biggest customers are trying to build their own chips, which could slowly chip away at NVIDIA's market share down the road. Still, NVIDIA's deep software ecosystem and multi-year head start have created a competitive moat that will be incredibly hard for anyone else to cross. For 2025, the demand for their tech looks so strong that it's likely to power through these risks, making a double a very real possibility. What do you think about NVIDIA? Still a buy, or is it too hot to handle? Let me know in the comments.
I think the market is expected to double in the next 3 or 4 years. So yeah, I do think that there's a ways to run still for this industry, and I think there's room for most competitors to succeed. I think NVIDIA is going to continue to grow its revenue and gobble up the lion's share of the industry's growth. But
he even talked about NVIDIA doubling in the future at some point. It's at 156 today. How would you go about an example trade?
Well, on NVIDIA, Nicole, I'm going to play the breakout continuation. It recently broke above the 153 area as a stock. This is an area that corresponds to levels the stock had published back in early July. There's a little bit of weakness today. We could certainly see some weakness in the short term continue amongst the semiconductor names because they've had such a tremendous run up. But nonetheless, I think that potentially that 153 area may hold for NVIDIA. So what I'm going to do is I'm going to structure a bull call spread for NVIDIA, and going out to August, expiration, third week of August, I'm going to basically buy the 155 call, and then I'm going to sell the 165 call against it. So it's a $10 wide bull call spread here. Altogether, just a few minutes ago, you could have bought it for about $4.50 a share, or $450 a contract. So in essence, it's bullish trade. So we do need to see the stock move to the upside. 159.50 is break even by expiration, which is again the third week of August. And then max profit on this trade is 550. So it's nearly a 1-to-1 ratio, return on risk. And that max profit will be achieved if the stock does hit 165 or higher. So it's a bullish continuation trade based on the breakout, which happened last week, and it does correspond to levels that it broke out of, and they go all the way back to the beginning of the year.
Our second pick is a company that has pulled off one of the most incredible turnarounds in recent memory: Meta Platforms. After a tough stretch where it looked like the company was lost in the metaverse, Meta has come roaring back, powered by a sharp focus on efficiency and a killer AI strategy. The stock jumped an incredible 26% in June 2025 alone, smashing all-time highs, and the pieces are in place for another potential double. For anyone who needs a refresher, Meta owns Facebook, Instagram, WhatsApp, and Threads. Its empire is built on a mind-boggling 3.4 billion people who use at least one of its apps every single day. That kind of reach makes it one of the most dominant digital ad platforms on Earth. First, that advertising engine? It's back and stronger than ever. Thanks to huge investments in AI, Meta's ad targeting systems are now scarily effective. This gives advertisers a better return, which makes them pour even more money into Meta's platforms. In its first quarter of 2025, Meta smashed revenue expectations, pulling in $42 to $31 billion, with the average price per ad jumping 10%. Analysts think full-year 2025 revenue could hit nearly $186 billion. This core business is a cash-gushing machine that funds everything else. Second, and this is the really exciting part, is how they're monetizing AI itself. Meta is weaving its Llama AI models into everything. We're talking AI chatbots for businesses on WhatsApp, AI creation tools for Instagrammers, and even AI inside their Ray-Ban smart glasses. Each one of these is a potential multi-billion-dollar business just waiting to be turned on. The company bumped its spending plans for 2025 up to between $64 billion and $72 billion, almost all of it aimed at AI. That tells you exactly where they see their future. Third, the stock is still reasonably priced for its growth. Even after its big run, Meta's valuation metrics, like its P/E ratio, look attractive next to its peers. With nearly $78 billion in cash, the company has a fortress balance sheet to chase its ambitions without taking on crazy risk. What are the risks? The biggest challenges for Meta are regulators and competition. Governments worldwide are always looking for ways to rein in big tech, which could hurt its ad business. On the competition side, TikTok is still a huge rival for eyeballs, but Meta has proven with Reels and Threads that it can fight back effectively. And yes, let's not forget Reality Labs, the metaverse division that's still burning through billions each quarter. Investors are focused on the AI wins for now, but if it looks like the company is throwing good money after bad into the metaverse again, it could spook the market. Even so, the momentum in Meta's main business and the sheer size of its AI opportunity are powerful forces. The company is firing on all cylinders, and if they keep executing this well, doubling its value in the next year isn't just a daydream. It's a scenario backed by serious numbers and a clear plan.
It's almost like investors are saying 100 million isn't enough, Deirdre. Make it 2.
Right, make it billions. It doesn't matter. Just spend as much as you can. And that really at the core of this is that this talent spend, it's the new signal to investors. Just like CapEx spend in the first few years of the race, no one wants to be the first to pull back because cutting comp doesn't just risk losing talent, it risks signaling that you're losing momentum. And now an internal Meta memo suggests that Zuckerberg's war on talent is even more aggressive, even bigger than we thought it was. It says that Zuck has upped the number of researchers poached to 11, coming from the buzziest and earliest AI native firms, OpenAI, Anthropic, DeepMind. And this is part of a major reorganization that puts Alexander Wang and Nat Friedman, 2 of the highest profile hires of the past few weeks, at the head of a new group at Meta called Superintelligence Labs. But what may be the most critical part of this memo, Zuckerberg writing that, quote, as the pace of AI progress accelerates, superintelligence is coming into sight. And this could actually be the more concerning piece for Sam Altman in OpenAI. Superintelligence, it is seen as the holy grail of AI, and whoever reaches it first will take the lead in the race. That is why it is so important. So for Altman, to lose that to someone like Mark Zuckerberg and Meta, that would be far more damning than just losing a few researchers.
The third stock on our list is one of the most polarizing and fascinating companies out there, Palantir Technologies. For years, Palantir has been a battleground stock, but in 2025, it's become one of the market's top performers, with gains over 80% at one point. This isn't just hype. It's the company finally hitting a massive turning point, all thanks to insane demand for its artificial intelligence platform, or AIP. So what does Palantir actually do? Simply put, Palantir builds software that lets massive organizations make sense of their messy, disconnected data. It started out with secret government contracts, helping agencies like the CIA connect the dots on terrorism. Today, it has Gotham for government clients and Foundry for big companies. Its newest product, AIP, lets organizations securely use AI models on their own private data. The case for Palantir doubling in 2025 is all about the explosion in its commercial business and the runaway success of AIP. First, Palantir's US commercial business is on fire. This is the part of the business that critics said would never work. Well, in the first quarter of 2025, its US commercial revenue grew by a wild 71% year over year. The company is proving that its tech isn't just for spies. It delivers huge value to corporations in everything from manufacturing to healthcare. Second, the demand for their AI platform, AIP, is off the charts. After ChatGPT, every CEO is scrambling to figure out AI. Palantir's AIP is the perfect answer. It sells the picks and shovels for the AI gold rush, letting companies build AI tools without having to share their sensitive data. In Q1 2025 alone, Palantir closed 139 deals worth over $1 million each, a huge sign of momentum. One analyst even called AIP the tipping point for enterprise AI. Third, they're finally profitable. For years, the big knock on Palantir was that it just burned cash. Not anymore. The company is now consistently profitable, and its operating margins hit a healthy 36% in the first quarter of 2025. That financial discipline, combined with insane growth, is the perfect recipe for a stock to get reevaluated by Wall Street. Now for the big risks. The number one risk for Palantir is its valuation. It's priced for perfection, trading at a sky-high multiple that assumes years of flawless growth. If that growth slows even a little, the stock could get hit hard. Another risk is its reliance on huge, lumpy contracts, especially from the government. And finally, its product is complex, which can mean a long, expensive sales process. Despite those risks, Palantir looks like it's in the very early innings of a massive growth story. It's positioning itself as the software backbone for the entire enterprise AI movement. If it keeps signing up customers at this pace, a double from here seems like the logical next step, as the market finally understands its real potential.
In this demo, we'll explore how AIP powers responsible, effective, and compliant AI advantage. We start with a military operator, responsible for monitoring activity within Eastern Europe. They've just received an alert that military equipment is amassed in a field 30 kilometers from friendly forces. AIP leverages large language models to allow operators to quickly ask questions. Show me more details. They ask what enemy units are in the region and leverage AI to build out a likely unit formation. What enemy military unit is in the region? Our operator requests additional imagery to build a more complete picture of the potential enemy equipment on the ground. Task new imagery for this location at a resolution of 1 meter or higher. AIP surfaces the option to deploy a nearby drone to collect video. Task the MQ-9 to capture video of this location. The footage confirms a potential threat. The drone footage shows an enemy T-80 main battle tank. Generate 3 courses of action to target this enemy equipment. The operator uses AIP to generate 3 possible courses of action to target this enemy equipment. Next, they use AIP to automatically send these options up the chain of command. Send these 3 options to my commander for review. Let's look under the hood. As our operator poses questions, the LLM is traversing a data foundation of real-time information, integrated from across public and classified sources. Data is automatically tagged and protected by classification markings, and AIP enforces which parts of the organization the LLM has access to, while respecting an individual's permissions, role, and need to know. For example, the LLM shown cannot access soldier health data by policy. Every response from AIP retains links back to the underlying data records, propagating the correct classifications as well as enabling transparency for the user, who can investigate as necessary. This functionality is critical and essential to responsible use of LLMs and AI in military contexts. Our commander must now assess the 3 possible courses of action generated by AIP to neutralize the buildup of enemy equipment. The system highlights key information for each course of action to assist decision-making, such as the time required and status of supplies. Our commander selects a course of action. Approve course of action 3. AIP has established which unit is closest to the enemy tank. Our commander can now begin to develop an operational plan for Team Omega. First, the commander uses AIP to assess the battlefield. Analyze the battlefield considering a striker vehicle and a platoon-sized unit. An automated terrain analysis model processes all existing geospatial intelligence to understand unit maneuverability. From here, AIP suggests the optimal route based on the unit's composition and the traversability of the terrain. Generate a route from Team Omega to the enemy equipment. Then, our commander validates the unit's supply of the munition needed to engage the enemy equipment. How many Javelin missiles does Team Omega have? Next, our commander wants to disrupt enemy communications. This will allow ground forces to more safely maneuver and help ensure that enemy equipment stays in position. AIP automatically identifies and pairs all of the validated enemy communication nodes with a disruption capability. Assign jammers to each of the validated high-priority communications targets. Targets are paired and ready to execute. Our commander instructs AIP to stand by before sending orders. Finally, our commander uses AIP to summarize and then submit the operational plan for the elected course of action. Summarize the operational plan. Submit.
So what does Supermicro do? They design and build high-performance, super-efficient servers. Most importantly, they are masters at building systems perfectly tuned for AI workloads. They work hand in glove with giants like NVIDIA and AMD to be the first to market with servers ready for the newest, most powerful chips. Think of it this way. If NVIDIA builds the race car engines, Supermicro are the master mechanics who build the record-breaking cars around them. First, they are a critical partner for NVIDIA. Supermicro is famous for its speed. When NVIDIA announces a new chip like Blackwell, Supermicro is one of the very first to have a complete server system ready to ship to customers. That speed is a massive advantage when every week of delay costs your clients millions. Second, the demand is just phenomenal. The market for data center systems is set to hit $367 billion in 2025. And within that, the spending on AI-specific servers is growing way faster. Supermicro's CEO has set a bold revenue target of $40 billion by early fiscal year 2026, which would be an incredible leap from where they are now. This isn't just wishful thinking, it's based on the record demand they're seeing. Third is their edge in liquid cooling. One of the biggest problems with AI data centers is the insane amount of heat they generate. Supermicro is a leader in direct liquid cooling, DLC, which is way more efficient than old-school fans. As data centers get more powerful, liquid cooling will become a necessity, not an option, and Supermicro is perfectly positioned to own that shift. Their CEO thinks over 30% of new data centers will need this tech within the next year. Now, what about the risks? Like our other picks, this is a high-growth, high-volatility stock. The hardware business is known for its boom and bust cycles, so any slowdown in AI spending would hit Supermicro hard. Supply chain problems are always a risk, and fierce competition from giants like Dell and HP is a reality. However, Supermicro's nimble approach and its deep partnership with NVIDIA give it a powerful edge. They are in the sweet spot of one of the biggest tech shifts in a generation. If they can manage the chaos of their own hypergrowth, the sheer force of market demand could easily send this stock soaring for another double.
Hey folks, welcome to GTC 2025. Here at the Supermicro booth, we are so excited to show you the latest, just announced GB300 rack. Now, this rack is going to take the computation to the next level, especially if you're trying to think about both AI training and inferencing. Now, you might notice when you look at this rack compared to our previous generation rack, the GB200 that we showcased last year, there's a missing CDU at the bottom. No worries though, seeing is in this case not believing or believing, because our CDU for this rack is actually going to pair with our in-row CDU. That's a 1.3 megawatts, so one CDU for a whole row of computational servers. And in the meanwhile, we gave extra room for some capacitor shelves. There's going to be many variations. We really just wanted to bring the latest and greatest for you to see today. Come tune in for more. Join us here at GTC 2025.
For our fifth and final stock, we're taking a step away from pure AI and into the high-stakes, high-growth world of biotech with UroGen Pharma. This is easily the riskiest pick on the list, but it also has the most explosive upside. Biotech investing isn't for everyone, but if you find the right company before a huge catalyst, the returns can be life-changing. Analyst sentiment on UroGen is off the charts positive, with some price targets predicting a potential upside of over 165%. So what is UroGen Pharma? It's a biotech company working on new treatments for cancers in the urinary system, like bladder cancer. Their main product, Gelmito, is already on the market and is an innovative, non-surgical treatment for a rare type of cancer. This is a field with a huge need for better options, and UroGen is carving out a name for itself. The thesis for UroGen doubling, or maybe even more, all comes down to its drug pipeline and a potential blockbuster approval from the FDA. First, the success of Gelmito. The product is already out there bringing in revenue. It proves their drug delivery technology works and gives them cash to fund more research. But Gelmito is just the start. Second, and this is the absolute core of the thesis, is their drug candidate UGN-1022. It's in the final stages of clinical trials for treating a very common type of non-muscle invasive bladder cancer. This is a massive market, way bigger than Gelmitos. If the trials are successful and the FDA approves it, it would completely transform the company overnight. An approval would open up a multi-billion-dollar market and likely make UroGen a prime acquisition target for a big pharma company. Third, they have other drugs in the pipeline, like UGN-103 and UGN-104, which gives them more than one shot on goal. That strong buy rating from Wall Street analysts covering the stock is a huge vote of confidence from the expert community. Now, we have to be crystal clear about the risks, and they are substantial. Biotech investing is a roller coaster. The future of a company like UroGen is often binary. It all hangs on clinical trial results. A bad result for UGN-102 would be catastrophic for the stock. And as a company that isn't profitable yet, it's burning cash. A delay could force them to raise more money and dilute shareholders. The stock's 52-week range, bouncing between roughly $4 and $18, shows you just how wild this ride can be. This is a true high-risk, high-reward play. It requires a strong stomach for volatility and a belief in the science. But given the massive market waiting for UGN-102 and the powerful analyst conviction, UroGen Pharma has a clear, catalyst-driven path to potentially double or even triple over the next year if the science pays off. So there you have it. 5 stocks that we believe have a clear, credible shot at doubling your money in 2025. We started with the AI king, NVIDIA, which is set for another massive growth spurt thanks to its next-gen Blackwell chips. Then we looked at Meta Platforms, a reborn giant firing on all cylinders with a dominant ad business and a brilliant AI strategy that's just getting started. Our third pick was Palantir, the enterprise AI company that's finally having its moment, with its commercial business exploding. We then covered Supermicrocomputer, the hardware provider building the backbone of the AI revolution, cashing in on the incredible demand for servers. And finally, we took a calculated shot with UroGen Pharma, a biotech innovator on the verge of a potential blockbuster drug approval that could change everything for the company. The common thread here is that all of these companies are riding unstoppable waves of technological change. While the rest of the market might worry about interest rates and politics, these 5 are playing a different game, driven by powerful trends that could help them crush the market. Just remember, high growth always comes with higher risk. It is absolutely essential that you do your own homework and figure out your own risk tolerance before jumping into any of these names. Which of these 5 stocks are you most excited about? Are there any other potential doublers on your radar for 2025? Drop a comment below and let's get the conversation started. If you found this deep dive valuable, please give this video a like and make sure you're subscribed with notifications on. We have a lot more in-depth research coming your way that you won't want to miss. Thanks for watching, and we'll see you in the next one.